Welcome everyone to a new episode of the Insilico Terminal podcast. Today I have with me a new guest called Nikalgo, who some of you may already know. But why don't you introduce yourself and tell us a bit about who you are, what you're doing?
Thanks for having me here, Sakio. Thanks for invitation. And I'm Nick and I'm a gambler. Feels like introduction to, Addicts Club or whatever. But just jokes aside, there is a little bit of truth to it. I guess a simple answer to who am I will be to say I'm a trader. But I think it's oversimplifying at this point. I'll probably just say a person who lives around the markets at this point. That will be more accurate. And some people know me as Nikalgo. Shorter, just Nick. So I don't know. There's quite a lot I might be going around today, just mainly about my journey and stuff. I've done quite a lot of different trading, done some business in crypto, done some stuff just in general around markets and not only markets. So I don't even know where to start. I will give you the reins and you can lead the conversation here for now.
I guess a good point to start is always just like, how did you get into crypto in the first place? When did you join? What made you join? What attracted you to it?
There's quite a bit of pre-story before it because I started learning about markets back in 2016, 2017. Like 2016, it was the moment where I was just learning what is the market order, what is a limit order. I didn't even know what order book was. Complete beginner. I was still in high school. At that stage, I didn't want to become a trader. I just wanted to, get a degree, get a job, invest some of my money into ETFs, stocks, and just grow my wealth over time. That was my initial plan. And, life has its own ways. A few years later, there you have me. It was initially, I was mainly focused about stock market. In 2017, I got myself a brokerage account, not even under my name. I was still not legal age, so I had my parents to do it for me. And I heard about crypto actually very, very early. It was, if I remember correctly, 2013, 2014. One of my uncles, he was telling me about this thing called Bitcoin and how you can mine it and how it can be the future of finance or whatever. He was just telling me, look into it. It's a good thing. And he was way too early. He was like in his 50s, maybe closer to 60s, but he always had this commercial acumen. He was collecting antique stuff, flipping properties. And I at that stage, I was 13 or 14. I was more interested in playing computer games and just hanging out with friends. Looked into it. I was trying even to install some miners, but I was afraid to catch a virus, so I kind of didn't do it. And then in 2017, everyone heard of Bitcoin reaching 20K and all of that stuff. And I'm like, damn, well, could have been a journey, but I was still very young. So I knew about crypto from pretty early age. And the moment I started trading like properly was 2020 in lockdowns, lots of spare time. Very accessible market was probably the main reason. Because, if you really want to trade something easy, like, without much hustle, back in the day, you can get yourself an exchange with no KYC. You can just deposit $100 and just give it a go, on perps or spot. So that's what got me into trading in particular. But I had a Binance account since like late 2019, where I just bought a little bit of Ethereum, XRP, and a bit of Bitcoin, of course. And I got dumped on instantly on March. So it was like my introduction to crypto. I wasn't planning to become a trader again back then. I was just like, let me see, what is it? Like, finally, maybe it's recovering. Like I was already at that stage. I wasn't complete beginner. I had some understanding of, fundamental analysis, technical analysis. And back then, fundamental analysis was still kind of relevant in crypto. I think at this point it's not as relevant and everyone understands the game a bit more. But it was the DeFi, even before pre-DeFi boom, like after ICO, which I haven't actually participated in myself. And what in particular got me into trading was one of my friends, he told me about order book scalping. Like look into it, it's pretty cool thing. And I looked, what is an order book? Because I was like, I knew what is it, but how can you trade like through an order book? And apparently there are tools. Back then for me, it was C-Scalp. Insilico terminal have an order book right now, which is like a DOM, depth of the market tool. But I was mainly referring to like C-Scalp as a tool where you can actually place orders directly in the order book really quickly, amend it, and like a separate category of the trading terminals, as I would refer to them. And it looked very cool to me. From the fact that it's actually you trade not something what is like arbitrary, like patterns or candles, candlestick charts. That thing didn't kind of catch my attention. Like I didn't think you can make money from it. But when it came to looking into order book trading, like depth of the market, I would say DOM terminals trading, DOM scalping. It made sense. I looked at a few videos, and essentially the idea was you just trade market inefficiencies, like some large limit orders. You see the liquidity, you see the order flow, you see the order book. At this point, it's quite hard to explain because it's already like deep into my mind. But back then I was like, damn, it actually makes sense. And one of the first videos I found was selling it. He was actually having a course, but a lot of free educational videos, like which were actually amazing. The idea is that a scalper makes money where majority of other traders lose money. And I'm like, then it makes sense. I want to learn that. And that's how I started. I had lots of free time. And there's much more to this journey, but that's kind of like initial foundation of me just playing around and finding out, I guess.
How long did it take you to get proficient with using the DOM?
I would say it didn't take me very long. Because, the first day I installed it, I probably spent the next like 6-8 hours just clicking. And my initial goal was I was just trading minimal lot size on Bitcoin. And I didn't want to make money at that stage. All I wanted to do is get familiar with hotkeys, get familiar with the interface, and essentially just work muscle memory up. Like I knew at that stage, since I wasn't new to the markets completely, I was just new to intraday trading. I'm like, sure. I mean, let me just learn this game. Technically, it feels a bit gamified because you have hotkeys. You have I would say constant thing which is moving in front of you, order flow going, orders, spending, amending. So it felt very alive, very engaging. And it actually got me on. I installed like around 4 p.m. and I remember like almost skipping dinner up until 10 and just like sitting and clicking. And then that day I made alone like maybe like 200-300 clicks on BTC. And I even end up making like 50 cents after commission and stuff because I already had an idea what to catch. But it was obviously 50 cents, nothing critical. Then in the next week, I started increasing my size a little bit. And then another week later, I lost 50% of my deposit, which was $300 initial. Then I was down to, it was FTM. I still remember. It was actually the first moment where I realized like how easy you can lose money. And it was the first most stupid mistake any beginner can make was averaging down as the thing goes down and down and down and down. And at a certain stage, I couldn't just hold it. I sold it. And next morning I wake up. It was above when I was entering, of course, and it wouldn't even have liquidated me. I just had a very big loss, very big cut of my deposit back then. And it was the moment where I realized, okay, like that's what they mean when they say psychology of trading, because it's one thing to look at the charts, on history. And another one is having like 50% of your deposit just burning right now at this exact moment. And you have to do something or don't do anything. That's kind of the moment I realized that, there's much more to it than just, getting technical, clicking fast enough.
So that's something that really impacted you back then and took you, was like a learning that took you to another level in your trading?
I mean, I would say it was the initial point that made me realize, okay, there's, again, much more to it. It was still a remarkable experience. I remember like that night pretty well when I lost this. It was just 150, but it was back then just realization you can actually wipe half of your account in a matter of it took me probably under an hour altogether. The moment where you watch every minute candle close and it's just closing lower and lower, it's a very bad feeling. And I would say bad feelings, bad experiences, they usually leave the biggest mark. And ever since then, I always try to have the position where I don't get and like don't end up in similar situation, essentially, where like I don't risk too much to the point where, even the recent 10th of October dump, I actually survived it pretty well. We will come back to it a bit later. But at any given moment of time, I look at my like exposure and I ask myself, like, what is the war? Like, is there a chance, even the slightest, I can get absolutely crucified here? And if the answer is yes, I need to change something. And yeah, well, 10th of October showed it well. A lot of people literally got wrecked completely. And yeah, it's all about risk management. And at this point, it's all about risk management. Like the 10th of October was more about that because I literally, since I'm based in Australian time zone, I wake up, it's 9 a.m. and I'm like, I have a bunch of DMs and I open my phone, pumping dumping Telegram channel.
No, I don't.
There's like a Telegram channel which says pumping or dumping. Right? If you're dumping heavy, it's like dumping. There's a lot of notifications. And I wake up, I have 30 of them. And first thought was, did we pump hard and then we retraced? And then I'll open the charts and I'm like, no way. I actually haven't had much damage, but I also had flight in 5 hours from that moment. So I was still like, trying to kind of get my stuff ready, ensuring I don't forget anything. And at the same time, looking at the market to see if there's anything to open. But yeah, we're getting into a zone of like 10th of October because that was a remarkable experience, I would say, for any trader who had perps position open back then. It was interesting then. For me, it was actually not painful at all, given I already have paid some of my, tuition earlier.
So how did you progress when you first got into DOM scalping? I guess you did that for a time, and then did you move on to like other strategies, or because your name is also Nikalgo, did you move into like algorithmic stuff eventually, or how did you proceed from that?
Yes, no, that's a good question, and it's gonna be a bit of a story here. Initially, yes, I started with DOM scalping, and at this point, I still have DOM terminals installed. I don't use them as often, but I would say DOM scalping, like this foundation of trading, is still like living in my core. And first 6 months, I would say first 6 months to a year, I was actively into it. It was like the primary strategy. I wake up, I check charts, I check levels, I open, just screening stuff, to see approach to levels, set alerts and stuff. And just for the next 8 to 10 hours, I'm just sitting there trading this stuff. The path of a DOM scalper is very simple, I would say, especially back then. Like most of the trades you're executing are either breakouts, consolidation breakouts. Because again, like to people who never done DOM scalping, I'll just probably have a bit of preface about what it is. And it's trading using the DOM terminal. I would definitely recommend looking what is a DOM terminal. Insilico can do it to a certain extent, for example. And at this point, I actually use it mainly. But a lot of traders use other tools. And the point is that you just trade market mechanics around liquidity. Because, if you have consolidation and if you breach consolidation, you don't need to, you're not guessing where the price will go. Oh, it might go up because of this or might go down. For a fact, if the price will breach consolidation levels, there will be a spike because of other stop losses, triggering other stop losses, triggering other stop losses, triggering liquidations, and there will be an impulse. Usually, especially if consolidation for a long time, even up to this date, you will have a big spike out of it. Then it can do full retrace, it might do retest and continuation, it might go collect other side liquidity. It doesn't matter, but the whole purpose of my trading back then was just collecting this initial impulse. And then it doesn't matter what happens, right? You just collect the impulse. Another type was also knife catching, which I didn't execute back then. At this point, it's my favorite strategy. Not even at this point. At this point, it kind of I would say decayed as an edge for me. I will also mention it probably later down the track. But a lot of DOM scalpers, they do trade knives. because it's also another form of impulse, but where you late for the first impulse and you just take the pull back from overextension.
Yeah.
And the type of trades, which I would say almost non-existent at this moment, but was really the bread and butter, like the highest risk reward. It's the real limit orders front running, where you have like a real limit order. If it's on purpose, it's even better because you can just place, let's say, a small wall right in front of it, and stop loss right behind it. So technically, like if that limit is real, right? Especially you need some proofs that maybe like it already touched it once, maybe you're waiting for a second one. But technically the trade is like, I call it 3 fee risk. So you have fee for entry, fee for closing, and your stop loss is roughly the size of a fee. So it's a very low risk where you can size up pretty heavily, and everything like your P&L is pretty much all the upside you can get from that bounce. Maybe 1%, sometimes you get full retraces. And at this point, the order book, I mean, it always evolves, it changes. Back then, you had much more real liquidity in futures. It was, I mean, it always was highly algorithmic, but you still had high baller traders who just like, leave $500,000 order as a limit and just leave it there, right? It's actually a real order, which you don't see as often these days. Market participants got smarter because market got more aggressive, in my opinion, not just in my, I would say. Or similar stuff with spot trades. But these are 3 core trades, for any DOM scalper, where you have breakouts, you have knives, and you have limit order retraces. You can call them different ways, but just pullbacks from limits. Or just from trying.
You basically just see like a really huge order in the order book.
You see a real, at this point, it's hard to see a real order in the order book. Because usually it's all spoofing, or if it reaches, maybe it will be just breached. I don't know, back then, it wasn't the highest win rate strategy, but it was very high risk reward. I'm not a big fan of risk reward in general, but it still classifies it pretty well. And it's kind of different stuff. So I was mainly trading breakouts, but if you ever see a real limit order, either on perps or on spot, and especially if it's not like a round number limit order, because round numbers attract liquidity, because traders can't be bothered placing like 10.55. They'll place $10 on a dot. So that liquidity often will be taken, just because it's not like something very substantial, and it's not like it's a different type of liquidity, just resting liquidity from multiple market participants, not just from one large limit order from one player, which usually you front run. And I mean, for smaller scalpers, it's bread and butter until your size becomes bigger, where you can't front run it no more. But I was starting with small capital, so it worked pretty well. And I was doing it like literally like as a mantra for like almost a year. And then I progressed. Like that's already, I would say, the whole beauty of, getting exposure to an industry, not just like, long exposure or short exposure allocation, is just, there's maybe some people will call it luck. But if you expose to an industry long enough, you will eventually find or maybe attract some opportunities, which you never know like what they will lead to. And well, there's only one way to find out. And that's literally what happened in my journey, because some people know me as well as the co-founder of Spreadfighter. That was, Spreadfighter initially was just a community of traders, and I got in there just absolutely by chance. In 2021, it was the earlier 2021 when Bitcoin was still around like 60K, before it did the dump to 30 and another rise, double top to 60. It was still the mania phase, absolutely crazy pumps, BitTorrent, BitShares, Safe Moon, Anchor, like these pumps I remember very, very cool. So there was just one YouTube channel I found. It was like, the guy was talking about stuff you don't see other traders talk. Because, if you look at educational materials on YouTube, it will be most likely the same stuff. 80% of it RSI, MACD, maybe combination of RSI, MACD, Bollinger Band strategies, kind of the generic stuff, which, which just we can come back to it later. But that guy was actually talking about heat maps, order book scalping as well. He was talking about application of moving averages, but not in the way that you expect, but just as like average conditional fair price, as he referred to it back then. And I was like the way he what he was talking about the market, it was like it really separated him. And I just followed his account for like a week. Then he was having a stream, and I joined the stream like it was midnight my time. I was scalping very late. The stream was almost over, and he was asking, "Is there anyone who knows English well enough?" He actually was Russian, because I also was born in Russia. I learned scalping. DOM scalping is the primary strategy, I would say, by CIS traders. Anyone who's in the Russian-speaking community, they usually like 50% of the entire trading population, their trades DOM scalping to a certain extent, or done it before.
Why is that? Is there a reason for that, or you have any guesses?
It's actually a fascinating thing, because if you take a look at crypto Twitter or English speaking YouTube, everything is all over the place. You can't find one systemic approach. And even if you look 10 different videos at trend following, there will be 10 different approaches to trend following, which obviously makes sense. But I don't know how it happened. There was a really good foundation. I guess, it's my guess, I'm not sure exactly how it happened, but there was a really good foundation of initial Russian trading community who were trading Moscow Stock Exchange. And some of them went into crypto, and a lot of them were just expanding into YouTube channels, content creation, course selling, diversifying the income streams. And it just snowballed into the degree there was very limited amount of education about trading, which is actually good education, I would say, not just some noise and some bullshit. And it just snowballed into the fact that everyone started doing it, and the more people did it, the more people did it. And at a certain stage, there was, especially when I was learning, go search up in YouTube how to trade. How to trade intraday, let's say, or something like this. And if you search it up in Russian, you will have majority of your videos about DOM scalping, people using C-scalp, Tiger Trade, and these were literally two main terminals which still exist, and a lot of people still use them. There are already better alternatives, in my opinion, but I still respect them a lot. In my case, C-scalp, I literally lived through it for about 3-4 years. So yeah, that's kind of the snowball effect it had. And it's really interesting because the whole Russian speaking community, they kind of you speak to any trader and they understand you intuitively and you understand them intuitively, because again, most of them trade the same stuff: breakouts, retraces, front running, and knives. So it's kind of the same school, I would say. It's quite opposite in English community, which is different. It feels more chaotic.
Yeah, for sure.
Yeah, just interesting observation. I also kind of get fascinated up to this day. Coming back to the story, that guy, he was looking for a person who speaks English. And I'm a bit introverted. It was late, I was exhausted, but something made me reply, yes, I speak English. He sent me his email, contact me. And essentially he needed someone, if I remember correctly, to translate some academic papers or whatever. And long story short, it turned into a Discord community. 1 month later, we're having, it wasn't a course. I was essentially getting it for free as a part of the, founding part of the community. And maybe pay back for my services as a translator. But yeah, it was paid course, paid invitation to community, where we were studying pairs trading, statistical arbitrage. And it wasn't even the automated version. It was just the idea of pairs trading, how to apply it in perps, in crypto. And back then it was even manual. We had a guest speaker. He was a friend of the founder. The founder his name is Alex. He's the founder of Spreadfighter up to this date. And yeah, it was back then. I was just doing kind of simple things, but pairs trading at this point, it also I can't say it's the holy grail of trading, but back then it looked like, oh damn, I'm onto something really secretive. It felt we had really close small meetings, 10 12 people, in them, and we're studying something what you can't find much information online, especially if it's like, even right now, you won't find a lot of good information about pairs trading, like, not from quantitative perspective, but from actual trading perspective. I haven't checked for a while. Maybe I'm wrong now, but in 2020 there was very limited information about pairs trading, like actually applicable, something what gives you like an approach, not just theory, right? How to do it. And we were studying it. Long story short, like a few months later, we established like something like internal prop. We were building our own software for pairs trading, like a terminal, which lets you execute pairs, with scanner module, risk management module, and also essentially same way as you have in Insilico working, but it treats pairs as your positions. For example, you have, I don't know, Litecoin to beat Bitcoin Cash, right? LTC, BCH. And there was a lot of there was a lot of development done back then. And eventually a lot of this stuff was starting to get automated as infrastructure was growing. And our team back then wasn't called Spreadfighter. It was just it was another name. But I would still refer to it as Spreadfighter. And it eventually turned into an algo fund. I was just, at that stage, it was already like a snowball, which just keeps on rolling and I'm just going down the path. But it's still kind of crazy how one random message that, yes, I know English and I can translate for you, can get me into an official position or involvement into what turned into a prop, then turned into an algo fund. And it was just a bit crazy, even up to this day, to me, how one random opportunity can change the course of your life for a pretty long time. And it also was happening, down the whole prop was founding probably around end of 2021. Before the NFT boom, before the Solana pump to 200 first time, that bull market. So, but technically the bull market was over, right? And I was transitioning from scalping, which is a really profitable strategy in crazy bull market as we had back then. It was absolutely insane period of time. I would say I'm not sure if we will ever have something like this, but scalping was a highly effective approach to the market back then. And part of me wanted to why? Part of me wanted question why am I switching from a strategy? Because I was still doing scalping, but I was kind of getting into pairs trading more and more, and I was trying to combine two approaches, shifting my focus. And it actually, early stage, I thought why am I doing it? Scalping still works, right?
Yeah.
But then we had FTX, Luna, 3 hours capital collapse, and market in complete turmoil. And scalping, I would say, probably would be a really risky approach there, and I could have given away. But risk natural approach kind of saved me, and I don't know, the transition was very smooth, and I navigated my journey through the market without much crazy deviation. I never had a story some people just blown up their entire portfolio in a day, same as it happened on 10th of October for many people. I've had large drawdowns, large losses, but nothing crazy because of how my journey was structured.
Yeah.
Yeah, I realized it's turning into monologue, so I just want to give you some space.
No, I was patiently listening to your story. So you basically started with scalping, did the dumb scalping thing, then got into the Spreadfighter community, which became a fund eventually, and then you started. You were doing scalping, but it was also it was during the bear market, so you started looking for other approaches, and then you went into more of the long short strategy, which is higher time frame stuff, right?
I went into long short even before the bull market officially ended, because it was more of November, December. I was already allocating 70% of my effort into pairs trading, still having scalp always open. My scalp was always on my screen for about 3 years of my life. Literally, I wake up, it's already there. I just, establish an API connection and I'm ready to roll. But yeah, it was like, not exactly as when it started crashing. It was like I was slowly transitioning into it more and more, because at that stage, my like 2021 was one of the best periods of my trading history. My portfolio grew simply because I've bought some things on spot, and I was actually, just allocating some of my profits from perps into different exposure on spot for longer holdings, right? I rode the Solana, I rode the Cardano pump to $3. I rode a few other things, and at that stage, scalping, like I couldn't allocate more capital into it. I started, entering into an issue of liquidity, because especially then liquidity started already like shattering.
Yeah.
And pairs trading offered much more flexibility, especially if you do it algorithmically. Because I haven't built infrastructure from scratch, but essentially like Spreadfighter was like a fund with internal pool of capital. And we took some like limited amount of capital from mainly friends and family, as we called it, and traded that. But yeah, if you allocate your portfolio like an exposure across multiple different pairs, and it's on a stage, it can be 30, 50 different pairs, you have much more capacity in total. So like that kind of worked pretty well. And yeah, the whole 2022 period was the stage of algo trading. It was very stressful, and I would say more from managing the entire state of affairs while the market is just burning.
Yeah.
It was interesting. I also had massive drawdowns on spot still, because I had a lot of Bitcoin holdings, Ethereum, and it was kind of like a pretty desperate times, even though it was not as bad. Like I didn't get completely wiped and I still was on my feet. It was tough times for everyone, I would say. That's why it's called the bear market, and a massive correction.
Do you do the coding yourself for the algorithmic strategies? So you have like a coding background, or did you teach it yourself? How did you get into that?
Yeah, that's a good one. I have financial education, finance degree. So like that's why getting into pairs trading was quite, I wouldn't say easy, but it wasn't as hard, because I already learned statistics, and all of statistics, which back then, by the way, 2020, 2021, I finished uni in 2021. So when I was just learning about pairs trading, I was just doing like advanced statistics. It was called Stochastics Methods in Applied Finance. The course was named Applied Portfolio Management, and a lot of stuff which I was studying there was actually highly relevant to what I was doing in trading, which was actually really cool to me, because it was highly applicable from maths and statistics perspective. But I actually never I don't have a software developer degree or like any prior education, and back then I haven't had GPT, so I was slowly and patiently learning my own Python, because we had Spreadfighter community at early days with this education about pairs trading, which was the only offering about pairs trading education you can have on the Russian speaking market, like literally no alternatives. So it there was initial screening. It wasn't like even a course which you sell to everyone. It was like screening why we should why you should join us. And Alex was essentially filtering out people who just here for the next shiny thing. He wanted to attract people who are actually passionate and genuine. And for example, that's how we found our DevOps, Ivan, who is still the chief technical officer of Spreadfighter up until this day. Pretty much the entire infrastructure is on his hands, and a few other developers. So it was we found I was exposed to a community of smart people from different backgrounds, whether it's maths or business or trading or coding development. And it I'm a quick learner. That's one of my greatest strengths, I would say, up until this moment. So I was absorbing everything quickly. I'm also a bit obsessive about new things, and it's my whole trading thing is one big stage of obsession about trying to solve the markets to a certain extent and extract money from it. Yes, I was just learning, to answer the question earlier, slowly learning Python without GPT. I was even at certain stage paying to external developers to build a few things for my personal use. I would say I'm still a terrible developer. I'm not the best web coder either. I understand like the system architecture. What actually carried me through is like, for example, I was running simple trend following strategies for some time. I was even trying to build my own pairs trading system independently from Spreadfighter, just to kind of like build my own version, my own approach, much simpler. And a lot of things, what worked for me is not the not the development skills, right? Not making my code work perfect, and like maybe optimizing for latency when it comes to like high frequency trading, where a lot of edge is coming from your ability to optimize for latency and execution. Actually, never done high frequency trading, so don't even want to don't have any expertise there. But a lot of my I probably spent more than 10,000 hours in order books. With C-Scalp, with Insilico, with other tools like Bookmap. Right now there's Okotoki, which recently I think they rebranded. But yeah, like a lot of different tools I looked at. And it made me kind of start noticing patterns, start noticing things, how order book operates, and gave me a lot of discretionary edge, where I just looked at the markets for so long. I'm very well familiar with its behavior, and especially in 2020, like there was a lot of edge coming from in 2020, 2021, where there would be just TVAP bot on. And that TVAP bot is not like, it's buying every minute or so, like kind of gradual TVAP. It's like the TVAP which have a goal to pump maybe $1 million worth of liquidity into the market in the next 5 minutes. So if you see something like that turning on, it's a no-brainer long. There is no breakouts, no like front running needed. You just see that thing. It's free money on the table, because like if you spot it early, you will catch all the upside that order flow will cause. And that approach, not even approach, but ability to spot things and trade them manually, eventually, led me to automating some of the things up to my best ability, of course.
That's actually quite interesting that you can do all of that, even while not having that kind of background, or just teaching it yourself, and not being the most proficient in that, but having all the trading expertise and still being successful through that.
There was quite a lot of fuck ups as well, I would say. I'm allowed to swear here, by the way.
Of course. You can say whatever you want. This is not for kids.
Not for kids. Explicit content warning.
Yeah.
Well, yeah. As well, it was really cool to me because as well, how at the beginning of the interview I said that I never was planning to become a trader. At the same time, I never had a goal of becoming an algo trader either. Like running my own, like I wouldn't say I'm an algo trader. At the moment when my Twitter handle, I created it, I was mainly into algo trading, and I was even like my approach at this point is creating assisting models for my manual execution. Some screeners, scanners, what helps me, navigate the market. I still love to do execution myself. And I believe some things, like what I would refer to as an edge, can't be caught automatically, like to a degree where I would want it to be. And maybe I'm just not capable to build some of them. Actually, maybe I just need to pay someone. Well, that's a preface, but it is impressive, how sometimes you just I never wanted to become a trader. And at the end of the day, I was running some algo strategies. Again, life has its own ways, and can't say I complain about it. Like it's a good thing it happened. I'm grateful for it. But if someone would tell me 5 years ago that this is what I would be doing, I would probably laugh, or I wouldn't be like, oh no way. But I would be like, seriously? Really?
I mean, I guess it can be quite an interesting profession, even if you're never prepared to get into it. And I mean, if you're good at it, then why not keep going and just push it to the limits that you can reach. I'm curious how your trading is like, since we went through all of your developmental phases. How is it looking like today? Like what is your bread and butter now? Are you still doing manual stuff? Is it all algorithmic now? Do you still do your knife catching, DOM scalping?
Yeah, yeah. That's pretty fast. But it is impressive, how sometimes you just I never wanted to become a trader. And at the end of the day, I was probably laugh, or I wouldn't be like, seriously? Really? I mean, I guess, if you Yes, and I would even start with the fact that I probably lost most of my edges up until this point. Like as of now, I don't have many edges left, and most of my trading comes from like most of the only edge I would say I have left is discretionary intuition. Like there are moments where I look at the chart and I'm like, hell yeah, this looks like it will absolutely fucking rip. And guess what happens next? It absolutely fucking rips. It happens very often, and it's like kind of intuition. It's not magic or like I've seen too many charts, and I also believe that in like chart, it's a visual representation of executed intent. And just because I've seen a lot of order book activity, order flow activity behind like the charts, I saw what kind of preprocessor of a pump, for example. I'm mainly long, like I'm usually long exposed when it comes to like longer term. But at the same time, I've done a lot of knife catching, which I would say 70-80% are shorts. But at this point, I'm mainly long. Like last 100, 200 trades, let's say 95% of them were long. And even then, like knife catching, like it's a very interesting thing to me, very precious thing to me, I would say, because it was at a certain stage the most profitable scalping approach I've had in my arsenal throughout the 2023, 2024. Especially, it was fairly limited capacity, but it was still something I was able to execute pretty well, and it had very high win rate and very high profitability for me. But it stopped working now. Like I can't catch knives right now. Like the market structure changed to the point where they're more choppy, they're less snappy, and I just kind of decided, like I realized, okay, this is no longer working for me. Some knives still behave pretty well, but I just realized it's less of an edge now. It's more of a thing I'm trying to reserve, like drag along as a dead body down my journey. And I'm like, nope, okay. But one thing I even mentioned, at the beginning when I was learning DOM scalping, a lot of people do knife catching, breakouts, knife catching, and front running. I was actually at the beginning, I never done knife catching. I was scared of it, because usually knife catching involves shorting the pump. Especially back then, during the market I was trading, there was very limited, drops. And they're usually less severe, but a lot of knife catching back then was revolving around, just you watch the pump end in a massive exponential growth candle, and that massive 1 minute 50% candle, which you just have enough balls to short, right? And I haven't had enough balls to short back then. But after doing pairs trading for a pretty long time, which is mean reversion dominant strategy, I was doing initially momentum. Then I was doing mostly mean reversion, and knife catching is a part of mean reversion trading. And a lot of my even pairs trading, which I was doing both manually and automatic reviewing trades, I looked, and essentially it was the point that, you hedge, let's say one of the knives with another leg. But in reality, you don't even need to hedge it most of the time. You need to hedge it on the long term for maybe risk management. But to me, it was like, what if I just don't hedge it and I just find a way to catch these things quickly and just trade them, as a knife essentially. And I started doing it, and it apparently was very, very simple back then. I don't know, it wasn't any friction for me to get into knife catching, despite never doing it, but technically doing it through pairs trading. And I just oh yeah, it works. And even the edge I openly actually revealed on X into CT, the daily close rebalancing. If you remember it, it actually doesn't work right now. I mean, the edge is fully decayed, but there was a moment on the market where at daily close, 0000 UTC, for me, it was 10 or 11 a.m., depending on daylight savings time or not. I treat it as market open. But the point is, you have massive spike of volume out of nowhere on the dot, pretty much every single day for the next few months, right? And sometimes it doesn't happen. Not every single day, I would say, at a certain stage, but at a certain moment, it was just day after day after day. You have 5 to 10 tickers just popping, bam, and 70% of them been reverted, right? So all you have to do is just be quick to find them. and just short them at the end of the it kind of like evolved over time, I would say, because I'm assuming more people start finding it. At the beginning when I found it was super simple, no-brainer type of trade. Then it became already a bit more picky, and there was stages where this actually would cause into momentum, like momentum ignition type of candle. So there was a bit of a journey to this edge alone. But yeah, that kind of like just observing the market long enough will bring you the edge, and just understanding why it happens. And I like after a certain stage of milking it, the edge, I shared it on Twitter, and I got like 70 likes for that post. Like literally, it was one of the most profitable inefficiencies I've had seen, which is like like no-brainer type of thing, which is super simple and fairly liquid, and you can give piece of bread to traders like literally on a plate, and they will just ignore it. I loved it, actually. I loved it. It was like kind of proving one of the points. You can give a full blueprint how to become a millionaire, or how to make your next $1,000, let's say, like a lot of, and 100 people will watch it. 10 people will do it. 1 people will actually achieve success. So at this point, I'm not even fairly hesitant to give away some edge if I would have it. But there is still that is on the markets, that one person who will actually do it, he will become your competition. And for example, as like not high frequency trader myself, but I know that if someone is 1 millisecond faster than you, he eats all of your profits. So technically, it have to be done kind of carefully.
How does your time zone, as someone as me, I'm an Asia time zone hater, and you're in the Australian time zone, which is quite removed from the core times of market activity. How has that impacted your trading, or have you gotten like around that during your times as a scalper?
Well, it impacted my trading a lot, but at the beginning when I was starting and I was most active, it impacted not my trading but my sleep schedule. During the lockdowns, I was simply going to sleep at like 5 a.m., maybe 6 a.m., and I was waking up around lunch. Right, it was still lockdown, not much difference, except maybe for my my body, which I kind of felt after a certain amount of time, and I had to, take a year of recovery and kind of step down, which was done with pairs trading, hopefully. But 1 year I was just like kind of burning myself through because it was working. Plus, at the beginning when I was just starting, I was still not as cooked, to not sleep up until 6 a.m. just for trades. There was a lot of activity around Asia session, Chinese Open. Right now it is not as crazy, but back then there was there was even a joke that burgers dump it, Chinese market just buy all the dip. And I was, it was a pretty good for me, actually. I wake up, I open a bunch of long exposure sometimes, and it works. And I mean, long exposure as of expecting long breakouts. So, and at this point, I would say I do way less trading, with much more respect to my health. And most of my trading actually moved into trend following. I don't do much scalping. I think it's a very hard strategy at this time. And my trend following is where I simply sit around my PC, look at the markets. And if I see something what looks like potential trend establishing, it's highly visual. It's very easy to see. Trend is nothing crazy. And yeah, at this point, most of my trading is just turned into getting long exposure and willing to place my money, as risk on it at the times where I feel it's the right choice to do. Again, discretionary edge. I even right now trying to automate it with one of my friends, and we will see what will happen out of it. Because I'm trying to bring a fair bit of my discretion into code, which is not the most trivial task to do. It
sounds pretty difficult.
There is it's like a challenge. I don't know. I think everyone who's successful around the markets, they enjoy challenges. Enjoy solving riddles, math tasks, or something else maybe entirely. But it's like kind of competitive drive, not even for the sake of winning, but just for the sake of participating and just doing something what kind of makes your brain work, not to let it age quickly. Because it's just an infinite riddle. Markets are an infinite riddle which just never stops, at least from my perspective.
No, I agree. That's what makes them like fun in the first place. That it's like an infinite game. I'm curious since you said like that a lot of your edges have decayed over time. Are you still looking out for new edges, trying to find anything new that you can like rely on, or is it like just so difficult that there's no real point in doing that, and you're just like relying on what you already have? Or
at this point, I'm always open to them, and I still rely on most of my edges were not done through the quantitative method. There's like quants who do numbers crunching. I'm not this type of algo trader. I'm more of a visual, applied trader who I've been in the market and trade in order books for a pretty long time. I would say again, over 10,000 hours, maybe like 20,000 hours. I lost count seriously, but it's just at this point I can kind of spot something what stands out and deserves my attention. You never know if there is an edge, but it's more of like I look at the market and I see, okay, this is interesting. This is new. Yeah. And, especially August, September period, just was discussing it with my friend actually yesterday. It was the period where I saw the most amount of cooked and fucked up charts. Like to a degree where, I've been on the market for a long time. I've seen many different charts, patterns, etc. But to the point where you look at it and you're like, what the fuck? BR, for example, BR, MYX. I literally had like a folder of screenshots where I saved it. BR alone, it's a pretty interesting chart. Like I understand the reason behind it. There was like some Binance event, but it's still like if you open up BR USDT, even right now, this shit looks insane. MYX, 200x pump, crazy. TA was a pretty weird chart. There was I had a few of them saved. And there was a lot of, just weird stuff happening. I haven't found any edge because these were more these were mostly independent examples. But I'm always open to it again. I'm not a big fan of numbers crunching, and I'm assuming maybe some people who do it, they found something what works now. At this point as well, I've been lucky enough with my journey, as I mentioned, for a long time. Like a lot of things and decisions, not just I've done it by chance, but kind of earlier decisions which snowballed into me kind of already being prepared for it. Same as a lot of people got wrecked on 10th of October. For me, it was something I anticipated years before, and I was always ready for it. Same with other dumps. There were dumps where actually the 2021 May dump and December dump, I got damaged pretty heavily. This kind of was the foundation for surviving future dumps. The point I'm trying to bring here as well about my trading is that I happen to be lucky enough to make money when it was the easiest. I think right now it's actually much harder for any crypto bloke, to extract money. It's still possible, but back then there was a lot of free money on the table. Like just grab it. If you pay enough attention. It's not as simple, but again, it was easier than now. And I managed to make money during the times where the money was supposed to be made. Back then, Alex, the founder of Spreadfighter, was even having a saying that right now is the time to make money. You will learn how to trade later. And there was so much truth to it, there is no better time than now. Technically, you learn, it kind of a bit of a funny statement. Back then, it was I laughed at it, but it makes sense if you really think about it. And for example, right now, my goal is just to survive long enough up until my spot holdings. Because I also, all the time, I've been kind of having some spot long-term holdings. Like my BTC average is 25K, Ethereum average is 1.2. I have Solana's bought at also $25, $30. Not the bottom, not the most bottom. I kind of not very successful there with catching long-term bottoms, but these entries are putting me in a pretty comfortable position where I don't have to constantly wake up and how do I make money? How do I make money? I need to make money. I need to eat something. I'm not in a rush. I have won myself enough time to keep on doing this. And at this point, I even, I founded a company earlier in July in June actually. It was end of June, right at the end of the financial year here. So I right now working on a few products, just kind of trying to migrate. It's still around trading. I tried our first product we tried doing was not related for trading. And like halfway through it, I like, fuck it, let's do a trading software. And they're like, sure.
Yeah.
I can't leave markets. I tried leaving markets and I had taken many breaks. Every year I have a period for like 3, maybe 4 or 5 months. I'm like, I'm done with trading, and not as if like tilted, but I'm like, I'm done. I need to do something else because like I can't do it forever. But I always end up getting back. And usually the moment where I get back, it's actually like, the right time. I don't know, like it's also something about intuition, because I always keep an eye on the charts. It just like at certain stage, I don't place trades. I just keep an eye on BTC, Ethereum and majors. And even like, I went on 10th October, dump. For me, it was already 11th because of Australian time zone. 5 hours later, I took a flight and I haven't looked at charts. Like, in a few days, mainly like every 2-3 days I check to ensure we're still alive. But I haven't placed much trades. And then I returned from my flight on Thursday, 23rd, placed a few trades over the weekend, and then we have the upside. So I have pretty good entries. And I would say even trading the chop post dump, looking back at it, I wouldn't want to do it. Everyone who did it, my sincere apologies, because it kind of was really choppy in my opinion to trade.
Yeah, usually it is after events like that. And I guess you're also right about like the market just having a grip on you. You can never leave. You're here forever. Well, what sort of stuff do you do for like protecting yourself from events like October 10th? Like you have spot holdings and stuff, but do you like split your holdings across exchanges and stuff like that, or?
Most of my spot holdings are on Ledger, on a few of them actually. It's just spot holdings for BTC, Ethereum, Sol, and other coins. Like the big bank, the big wallet. Then I have some hot wallets, Phantom, and then just the general stuff. I would say for anyone who's been exposed to crypto for long enough, you have like kind of like 3 centralized exchanges, 2, 3 decentralized exchanges, maybe like 5 different wallets, etc. And the thing what actually protect me from risk, from getting wrecked on 10th October dump, like the spot wise, I took some damage, but it wasn't heavy because a lot of people got wrecked mainly on perps. If you look at spot, well, Cadena got wrecked, but after, because of their announcement, for example, like very few things got absolutely destroyed. Some things got -50, to be fair, but it's crypto. Like, it's something what like I expect. I never place more than 2-3% of my net worth into a single coin if it's an altcoin.
Yeah.
Right. I don't put myself in a position where some random dump -50 can, actually half my net worth, because BTC kind of fully retraced almost, to pre-dump numbers. Ethereum did the same. So like, it's not critical. On perps though, that is where the whole thing came, because I had a lot of long exposure, but back then it was already in profit. And I had stops, some positions break even, some positions are in profit stops. I'm a big fan of using hard stops. There is like kind of like a debate whether you need to use stops or not to use stops, at least for algo traders, and it is worth debating. But if anyone is trading, just discretionary perps, like stops are a must, and especially having stops in break even. After your position kind of confirmed, especially I'm trading trends. So if I'm entering into trend and right now like I'm 10-15% into profit, it would make sense for me to place a stop at the point of a new point of invalidation, right? Because if, let's say, trend fully reverses, there is no point for me dragging extra movement down, because we just over. Like you leave earlier than later. And even the story about it, the day before, the night before dump, I was literally I woke up at 9 a.m. For me, it dumped in Sydney time around 8:30 a.m. I went to sleep that night around 12:01. I had long on BNB from 1,000. It was on lighter, just farming some points here. But I had pretty good entry on BNB. Back at the moment when I was going to sleep, the BNB was like 1,300 something. I had my stop at around 1,200. I'm like, let me place it 1,150 or so, just in case of extra volatility, so I won't be taken out. And then I wake up and I see the thing went to 850. So technically, I cut some of my profits because of I moved stop below, and at that point it didn't matter. Well, even if it's 1,000, even if it's like 10% below my initial entry, it doesn't matter how much profit I'm taking or how much loss I'm having. And that's what actually saved me, because I had a lot of good entries. I had a lot of good stops. I woke up. Pretty much all of my long exposure was wiped. And except for ZEC, I have Zcash long opened. From 65, so I kind of unbothered there. And all it did for me, it was having stops, good entries, and not taking an excessive amount of leverage. Because like on December 2021 dump, or I think it was December 2021, there was a moment where like all of my risk seems to be calculated. But when everything starts dropping simultaneously, your free margin ends very quickly. And what seems to be like, in isolation, you look at this position right now, your liquidation price is here, but it's including unrealized profits from other positions. But when they become unrealized losses, your liquidation price moves like extra close to your entry. I mean, extra close to whatever price. And that's what, like, for example, it caught me a little bit off guard. I knew about it, but the move was so feral, and I'm like, damn, okay, I woke up, and it was a pretty big cut of my deposit back then. Not the biggest, but it was a lesson. And I'm like, okay, how do you ensure it doesn't happen next time? And that was pretty much like, I paid for it once, and I haven't had to pay for it again. As long as you learn from your mistakes. I think like if anyone who had, their entire portfolio lost on the 10th of October, sincere apologies, just don't let it happen again. That's my message to
you. Just don't lose all your money again.
Literally. It is very simple, guys. Just don't lose your money. That's the secret of trading. But no, there's truth to it.
There is,
I was yesterday discussing with my friend, MYX. If you've seen this absolutely insane pump, I caught the MYX from like 11 cents. It went up to $20. I closed my position. I literally was laughing. I was sending him trader make money screenshot. My entry was like almost 12 cents, 11 cents, and I fully left at 32 cents. That thing ripped up to $20, and over the next 2 months, it went, I think, up to $3 in the first place. And I'm like, wow, okay, that's a big kind of L, even though my total realized, like I do DCA out. So I closed position in partials. It was 60%, 58.03 as of trader make money. And I was like, damn, okay, well, I should have taken, I usually leave runners. That's how I caught tier B pump back then, the infamous tier B pump on the year 2023 to 2024 or 2024. I think one of them, but tier B, anyone who was there, I remember tier B know what I'm talking about. Because I also get a pretty good entry, and I just like left 10% of my initial size. But by the time when that thing did 10x, this 10% pretty much became profit of my like full position before opening. So it like kind of 2x just on 10% remaining, because the whole thing did 10x, right? I mean, obviously I would be happy to hold the entire position up to there, but you never know. And this is like what leads me to the point. 10th October was an extreme deviation, like, tail event, as it's called in statistics, right? Tail risk, as some would refer to it. Some traders who are not ready to tail risk, they will eventually get destroyed. Like it's up. There are events every 2, 3, 5, 10 years, no matter how well you perform, if you can't control your tail risk, at least with some sort of protection measures or risk management, you will get destroyed, and it doesn't matter what you do. And you can feel terrible about it, but at the same time, you can have anticipated it earlier because it's not a secret knowledge. But same way, it's also MYX pump made me kind of reassess my approach to positive tails. Where, when I enter a position, I might be expecting, 20-30% move, maybe 50%, maybe 100% move, right? As well, depends on a ticker, right? If I'm longing BNB, I'm not expecting it to really go crazy, or like BTC, Ethereum. But if I'm longing something less liquid, it might go crazy. And as well, in case of MYX, from 10 cents to $20, 200x. Something around that, depending what point you take, because entries, exits are not perfect, but it's the potential move which matters. And this was the positive tail event, which I personally not always ready. And even I'm the big fan of leaving runners, and I always recommend leaving 5, 10, 20% of your initial entry size into a position, especially if it's keeps on trending, keep on showing momentum, same as ZEC. I'm out of ZEC mainly, possibly already 70% because I bought spot and futures. But I still have decent exposure to ZEC on both cases. And right now it's already 300% from my entry or so. So that's a takeaway. Believe runners. They will be covering a lot of positive tails and adding extra returns to your portfolio. Can't emphasize it enough.
Those who can't manage their risk will have the market manage it for them or something like that.
Good old Suzu. Suzu said it best.
I think so.
It gets reposted every year.
Yeah. As we're going to wrap it up for now, that's it for me and my questions. Is there anything that you want to say at the end? Anything that you want to wisdom you want to give, or anything you want to plug or shill or?
Well, gamble responsibly, gentlemen. That's probably the closing note. Be open to experiment. Be open to experiences. Look where others are afraid to look. And don't rush. Just be here. Stay here and focus on surviving.
Yeah. Don't blow up. Don't lose all your money.
That's the takeaway.
Yeah. Thank you very much for coming on. I think this was a good talk.
Thanks for having me as well. I mean, always a pleasure. I do have podcasts every year or so. So it's always good to even see, the progression. My first podcast ever was with Stoic. Then there was also another one a year ago and a half. And it's kind of rewatching them every now and then. I'm cringing. Oh, damn. I was a weird.
That's how it should be, I hope I cringe in a year when I watch all of the old episodes or whatever, because that means that you improved. So that's a good thing.
No, literally, that's the case. But it's a good kind of to leave these traces, of verbal traces. Yeah, literally, instead of because I sometimes take a look at my old posts, to see just as a journal, to see just the progress I actually made, just to stay consistent on top of it. But verbal ones, even the way you speak, what you speak about it, and the tone. I don't know. It's always great pleasure, and especially even Insilico terminal. I haven't been using anything else actually out of terminals right now, and grateful that you guys exist. I should have said it. I think we're still recording, but no. So big shout out. If you're still recording,
we are. This is going in. The shilling.
This is definitely should be, and as well. Thanks for the frog. The badge of honor.
Of course. Yeah, I think